you're misinformed, you're giving so much improper information, and there's so many people out there masquerading as someone that knows what they're doing. And all of that is a disadvantage for you. And it's almost like a landmine field laying in front of you. And you really need to know where to step, because if you step the wrong place at the wrong time, it's over. And if you do it enough times, no matter how strong you feel about conquering this and knowing that there's going to be periods of adversity, at some point, even the best of you will want to throw in the towel and quit. I'm here to tell you, don't ever quit. It doesn't cost you anything to watch these videos except for the time that you invest. If you keep digging into them and keep practicing what I tell you to practice and keep studying and looking for the things I'm pointing to, it will happen for you. It will unlock your understanding, and one day, what day, I don't know, but it's always different for somebody else. And I have students from my 2016 group that still cannot make money. I'm being absolutely honest. But I also have students that just came into this final group in 2021 that are literally killing it because they were trading with information they learned here, but it was hit and miss, hit and miss. Now they're doing exceedingly well. Was it because they joined the mentorship? Probably. Or was it because they put enough time in beyond what they probably thought was going to be required? I think it's that. So don't give up. Don't let someone else convince you that you're wasting your time doing this. The worst thing you can do is tell your friends and your family what you're doing. Don't even do that, because they're not going to understand. And they're going to be asking you, usually at the wrong times, hey, how you doing? You're so-and-so. And it'll be a period where you're struggling. And they'll be like, well, I'm glad I didn't listen to you. How's that going to make you feel? It's going to make you question whether or not what you're doing is a viable means of pursuit to a better life. When I'm telling you, it absolutely is. This is the last bastion, folks. Look around. I'm not going to describe what I'm really hinting at, but all you have to do is look around. Every form of employment is being ravaged right now. It's going to get worse. Do you have a hedge against that? Do you have a way for you to feed you and your family without having to leave your house or hold your hand out for a government handout? No subsidies required. No leaving your home. As long as you have an internet connection and equity in the
Yo, what up, what up? We're back again for New York session, guys. Friday, 20th of May. Hope you had a good London session. I did. I took it easy today, so let's get it. Little tape reading session today. We can. Alright, let's see what's up, guys. What's up? Need to short it when it took out the London high. That's good, because we have equal lows, right? And DXY didn't even make equal highs, so we'll have to see how this forms. But we did trade below daily opening, so it's high probable we're gonna move up on DXY, but looks a little bit consolidating to me too, so no hurries. No hurries at all. IPDA, PDRA, yeah, we don't discuss CBDR and Asia range projections on the stream. How are you doing? Roger and Abdi and Sahil. Jean-Philippe. Simpewe. Good afternoon. Anyone else agree Mark's being weird? Yes, I agree. Even ICT says it. It's the hardest 18 or what did it say? Yeah, the hardest 18 months in his life trading Forex. So if you can pull out wins, it's still good, because even ICT says it's pretty tough, the circumstances. Hey Leon, which pair are you looking for? I'm not looking at anything today. I'm just gonna hang out with you guys and we're gonna watch some price action. And I'm still in this USD cat from yesterday, so I want to see it draw lower. The only thing I don't like is we're trading straight down below daily opening, but overall, if you look at the daily, we entered this fair value gap and we're rejecting, so I would not assume we would go up from here. Rather go into this, so that's why I'm holding this trade. We are doing alternate strings. Any specific pair? No. Yeah, the thing is, normally I would see this as a target, but then I look at DXY and it did not even come close to this high, so I'm wondering why it does that, right? So, and it's also ranging. Look, there's one big range. Not the most favorable price action. Today tape reading, we can possibly do that. What percentage are you holding on USD CAD? I think it's 30% of my full position. Yeah, around 30%. So I actually closed. Let's see. Yeah, I closed half around here because it was very slow at that time. Yeah, it was just doing nothing over here. So I closed half and went break even, and then I closed another at this low. And then we retraced, and now I'm still favoring bearish price action, even though we're trading below daily opening. It should still go bearish, basing it off the higher time frame. So look, this is definitely not a bullish. This is not bullish order flow, in my opinion. What's my bias on DXY? Bearish still, but it's Friday, so I don't know. The range of the week might be capped already, so not gonna. I mean, if we take this whole big range where this price lag came from, we're still in premium. So as long as we don't hit this 0.5, in my opinion, we should still be bearish. So that's my thought on it. This daily leg started from here, swing low to swing high. this internal range liquidity or intermediate term short low or something. I don't know, I just call it internal range liquidity. So yeah. What does DOP mean on your chart? DOP means daily opening price supreme. It's New York midnight. Gold Asia range high ran during London. That is a correct statement. Oh man, yesterday I was in a gold buy which got stopped out early. Over here. I went in over here. This is a long position, not a short. Long. I had my stop loss like this. And then this potential was so high and so unfortunate. But oh well. Part of the game, I guess. My timing was a little bit off, so. You think ICT is doing a live stream today? I will go offline. If he does a live stream, I will go offline and I will watch his live stream. How to find out the correct bias? Have you watched my daily bias video, Leon? I think it explains it pretty good how I look for the daily bias. I think ICT is. Oh, I already read that. My bad. Abdullahi, I will watch Indices in a second. Steven, I'm good, thank you. He will be live on Twitter. Oh, he is doing a Twitter space, I think, right? Yeah, I still think USD should go bearish. Definitely, it's just it would make no sense to go bullish from here. And the reason is we tapped a very high, higher time frame PD array, built of monthly fair value gap almost fully, broke down after, disrespecting bearish PD arrays. So yeah, then we did an order flow entry in inside this fair value gap, and we're rejecting. So I would be flabbergasted if we would go bullish on this. The only reason why it maybe can go bullish because it's Friday and it will do a seek and destroy profile, and that's the only thing I can think of. Oh, it's gonna. We have some thunder in my country. I said your name right, okay. Let me check out your chart. Simp with the charts. Hero, copy. Salim, how are you doing? How was your birthday? Did you have a good time? Alright, let's check this out. Let's check this out. Consolidation inside a daily OB. Price traded above Asia high. We wicked through previous daily high during London kill zone and left. Clean highs. Are we gonna run the engineered liquidity and continue to run high and reject from the 4 hours minus OB, or trade below opening price and return to discount? Alright, this is actually a good chart and a good question. So we're gonna ask the chat today. The chat is gonna decide. Today the chat is the market maker, so tonight's the fun because it's Friday. Yeah. Pratik, I think we will create new weekly high today on EU. Yeah, I have the same feeling, honestly. So guys, what are we gonna do? Are we gonna go down or are we gonna go up? So I actually think these lows will stay intact. And the reason is because DXY did not come close to this high. So you can sort of call it SMT. It's just an indication that the DXY isn't allowed to distribute higher, whilst EU was. So normally I would say this is a target, but since it's Friday, I'm not too sure. And then with DXY, right? That's why did it not wick higher? It's still a target, so I would not advise taking a trade in this range. Down to discount level before going up. Let's check out gold. Let's check out what's going on. My 2 cents. What's my 2 cents on this one? I think we will not go back down. I think we'll go straight up. Yes, that's what I think. It might. I think this range will stay intact. So I think this is the move. Because if we're still bullish today, we should not go deeper than that, because we just created a new swing low on the 4 hour. So we need to violate it. We're already close to this buy side liquidity, so why do we need to go all the way back down into discount? How much do I usually risk? About 1%. One and a half percent is max for me. The box set down. Oh no, then we might go down, Elias. The secret box technique. Alright, so if Elias says it's going down, it's probably gonna go down. That's ICT student in the chat, by the way. So. This is what I'm expecting at the moment. Euro GBP is ranging, that's annoying. You said down, has he? You called, you said yesterday, right? Goal to like 1800, where was it? 48 or something, right? Yeah. It looks like it wants to go where I wanted to go, straight up. In EU, not gold? What do you mean? Hey DK, how are you doing? 1854 long term. Yeah, I personally think we should go higher. I think because we're on the buy side of the curve right now, and then we've got our original consolidation over here, right? Then we've got our massive redistribution. Always forget if it's red or blue on the left side, but it's fine. This one, right? And now we're reaccumulating. Reaccumulation. And then eventually I think this should happen. So this is we're on the buy side of the curve at the moment. EU looks like 5-minute market maker sell model. Yeah, I actually had it reversed because you also have an original consolidation up here. But I don't think it's sensible to trade in this range right now. It's Friday, so. And if you go to the 1 minute, you have equal highs up here, right? So there's a chance we can go up there. So let's see. Gold going down, Kareem. Yeah, the chat is split up. The chat is split up. EU down in the OTE. We'll see. We'll see, Elias. We'll see. Yo, bro, what template is that on TradingView for those ranges? You mean these standard deviations? US oil might be forming a Judas swing. Yeah, there's a gap here, a volume imbalance, so there's actually a high chance it will. I mean, there's also equal highs, so yeah, order flow looks bullish, so I'm not sure. Not sure. Yeah, bro, the standard deviations, or you do them manually? Yes, manually. I use like 2 vertical lines, right? I just put 2 vertical lines, and then I put my Fibonacci tool, and then I can draw the standard deviations. ICT just started the Twitter space. Let me check it out real quick. Oh, he is. I'm not hearing anything yet, but the space is open indeed in Twitter. If you have Twitter, ICT is back on Twitter, so. Oh, he's online.
Response back to that. Everyone that's asking to speak with me, I'm gonna ignore your request respectfully. I don't know what I'm doing on this thing.
Oh no.
Is the audio clear? Is the volume good? Thank you, J-Rod.
Good day, Danny. How are you doing, man? He is right. There's nothing happening. There goes gold, guys. Straight up. And there's actually something on the chart. If you can find it out. It's on the 4-hour chart. White doesn't have to go to discount. If you can find it, DM me on Telegram. And I will say if you're right or wrong. Gonna be a slow session, guys. There's nothing happening at all. So it's probably gonna be a consolidation Friday. Oh, he's back. Alright, I will do that. We're gonna follow ICT. Are we cool with that? Or I really want to hear what he has to say. Good morning, bro. Question: how can you tell if it's a good OB or a bad one? It depends on which price range you're in. So if you're in discount and you're looking for buys and the OB is over there, then yes, good one. The most high probable OB is the one that takes liquidity and then breaks the structure after with force or with speed. So that's the order blocks I prefer the most. I don't have ICT Twitter. You guys want to listen to ICT too, or let me know. Otherwise, I'm gonna just please repeat what you just said. I don't know. What about the order block? Yeah, I'll listen to him later. Bro, assuming there's an OB and equal lows below, do you wait for the rate or do you get in from the OB? Like the same situation is occurring right now, right? There are equal lows on EU. Now we have to look at correlation, because this can be a target normally. And then we go to DXY, but we're seeing the same high is not equal on DXY. So DXY looks to be not having enough juice at the moment. Then again, the market condition at the moment is ranging. So we can just go from discount to premium, but it's doing that right now. But normally you would not want to take a trade when there's equal lows. But in this instance, I believe we'll go up and leave those equal lows because we have equal highs up here. So we could run up here and then move down or complete this model. So let's see if I'm right today about this, but it's just practice and price reading. So if you look at EG, should be going up right now. Yes, it's going up. And then DXY with that, this high not being equal to this one, sort of indicates it's not having enough power. And order flow is still bearish on the higher time frame, right? Listening? Alright, let's listen to ICT. Oh, maybe I can do it on if I open Twitter on my computer. ICT, where you at? Over here.
Whether it's been by hook or by crook, you know what I say in that internship. I talk about how that on big down days or large range
Can we hear him?
big ranges
Hold on.
beget small ranges.
Hold on, guys.
Small ranges beget large ranges. I learned that from Larry Williams, and I think it's a truism. It's going to never fall out of style. It's real. When there's a lot of excitement,
I want to increase the sound. How do I do that?
interest in a market, that's when everybody else feels comfortable going in. And I don't want anybody to take one or two of those tweets that were given yesterday, which I obviously
Can you guys hear him?
insulted most of you. That's not my intention with the Twitter, but I made an attempt to walk you through a day, which I guess in retrospect, looking at how I guess this is a lot easier, but I wasn't confident that I was going to make it work. So I had my son next to me, and I was going to just basically translate what I was giving him with you.
I'll put his handle
So
in the
if
chat
I've
so you
given
can
you a lot
follow
of
ICT
tweets,
on Twitter.
or you're wondering like, man, what did I sign up? I'm not going to keep continuously do that, obviously, but the session yesterday was really geared towards teaching you how to avoid blowing your account, focusing on the real manipulation and the move that takes place in the day, and how we moved and gyrated around that initial fair value gap. I gave you the levels and showed you in the video on YouTube last night in episode 32 of the 2022 mentorship series on my YouTube channel. It just kept going above and below and then gravitating right back to that fair value gap. Just stayed within that range. It only went up a little bit just to take the buy stops, and very, very shallow declines. And as soon as you determine, if you haven't really got that much experience yet in trading, the sooner you can find out that you're in a day like that, the better. And then you're met with, do I continuously watch the market, or do I wait to the last hour of trading? And that's kind of like the takeaway from yesterday. You're going to learn by failure that you're not going to see these things coming all the time. But as a precursor, just know ahead of time,
Actually
when
chilling,
we have big down
listening
days
to ICT.
and there's a large range day and we're near the end of a daily range and we're within the last few trading sessions, and now, for weeks and a month or so, we've been bearish. We've been seeing the indices go lower since the beginning of April. So I'm not calling the bottom. I'm not trying to pick the bottom, but if you're going to be day trading or studying price intraday, you have to be aware of what may transpire after you see these big down days, especially if you see a outside day with a down close near the end of the price run. And what do I mean by the end of the price run? If you refer back to the low made on May 12th versus the April highs on your daily chart, that whole entire price swing, we're near the end of it right now this week, but we didn't get a lower low on Thursday with NAS or SPOOs. We got it with Dow. So while I don't trade the Dow, and why don't I trade it? To me, I think it's a little too sloppy. It's erratic, and I'd prefer to be in S&P. S&P will have the cleaner price moves. NASDAQ, if I'm in an idea that is parabolic, in other words, I think the market's really going to run, I think it's going to really take off and have a big range day, I want to try to trade in the NASDAQ because I want that, because it tends to exaggerate everything when it's a big move.
NASDAQ moves crazy.
Other people may say, well, I'm not going to trade the NASDAQ because it's going to rip my face off and I'll slow down and go into the S&P. I'm not like that. And you've seen me do that. I've done it with live trades, live account. I'm not afraid of that. You won't be afraid of it either, but it doesn't mean it's an invitation for you to go out there and risk live money. And everything I teach you should be viewed in the context of paper trading and demo. But I've kind of like wanted to go into this year, like I mentioned last year, of trying to prove to everyone that there's no reason for you not to go in and look at this stuff on your own and see it for yourself. But invariably, when you do these things, like Murphy's Law, whatever can go wrong will. And as a new student, it's very easily found for a new student to be discouraged because of initial adversities. And if you started, like, for instance, if say you signed up for this whole business of ICT mentorship, ICT concepts, smart money concepts, whatever, and you started learning yesterday, that is going to be a huge hurdle, and it's going to create a lot of doubt and confusion because the intraday range was choppy, it was sideways, and that was more or less what I was walking you through. Go back and look at the tweets and you'll see you can't just take one tweet out of there and say, oh, look, he did this, he did that, he didn't do this, he didn't do that. The whole context was stay out of the marketplace because we went to 50-50. So 50-50 means we're going to be in consolidation. Consolidation means wait till the last hour of trading. It doesn't mean you're going to get it right. It doesn't mean I'm going to get it right. It just means that as soon as you realize you're in a choppy, range-bound market, especially with index futures, this is predominantly linked to just index trading. This is not a Forex idea. I don't like Forex, after noon, to be honest with you.
Same.
Noon local time, New York. But
It's London
if
close.
you noticed
It's
how we
terrible.
were
I've never traded.
just holding that range and ran up for the buy side, as I was outlining in the tweet yesterday, the whole context of what I was
Nasdaq
taking
is
you
like
through.
a monster in CME kills.
A lot of traders just want me to, or students, I should say, want me to just get to the point. Give me a way to buy or sell. Pick my
That's
entry.
not how it works.
Give me a way to determine where my stop loss should be. Tell me how to move my stop. When should I move my stop? And give me a target. And the fallacy in expecting that to be understood, because I have already done all of that. Like, that's already on YouTube right now. The problem is there's so many variables to how the market's going to book, present. What I mean by present, it gives you opportunities, and sometimes it gives you these impressions that it may be a good day to trade, but then all of a sudden, as soon as you press the button, it does what it did yesterday, and it can be very frustrating. I can tell you, as a younger man in my 20s, when I first started trading the S&P, we didn't have these big ranges back then in the 90s. They were nowhere near the level of volatility that's available to all of us now. But the idea of getting in on those days like yesterday, when I was a young man, I would be in there trying to capture every continuation, bull flag, bear flag, the whole business. I would go after everything I possibly could to anticipate the next run, but only on the upside because I was a buyer. I didn't want to short anything. But I would literally blow my accounts out all the time with those types of days. So you have to know what leads to those events, so that way you can avoid it, or at least know that once you're in it and you've taken a loss or two,
gold,
you have to learn how to stop.
Yeah, it can still go into this gap and then move up. So we'll have to see.
And when it's easy and the markets are real primed, and we're not primed to do anything exciting yet. I'm watching the charts as I'm talking to you, so don't think I'm not paying attention to it. When it's easy to see the market drawing to a particular high or a particular low, and it's one-sided.
There's actually S&T, so you might be right, Hesse.
Liquidity run.
Let's see.
Okay, where you have just a real easy run to an objective. It's so one-sided, you can't even argue about the possibility of an opposite perspective. That is my definition of high probability. I get the question all the time, like, what makes a trade high probability? The fact that you can only really define it either in a bullish stance or a bearish stance. And using the concepts that I teach, it's impossible to sell it to yourself as a opposing opportunity. In other words, if you're bullish, if you think the market's going to go up, can you go in any way, shape, or form, justify a short using what I'm teaching you? And if that's true, you can find something that's short. That's not high. It doesn't mean that it can't still go up. It just means that it's not high probability. So when I'm mentoring my students, I'm teaching them to look for those types of setups. And the whole point of yesterday was not a high probability setup. And I told you, watch, they're going to build this up, take the buy side out, and watch the middle of the range, and it's going to occur between 3 o'clock and 4 o'clock. I don't know why these beta males out there that want to sit here on the
Beta
sidelines when it's
males.
safe and not show you anything that they're
He
doing
calls
this
them
year,
beta
but
males.
they want to talk and chit chat.
I'm dying.
Go into the whole timeline of yesterday and the real riders that were with me the entire day yesterday. Yes, it was grueling. Yes, I beat your Twitter up. Okay. But you came away with now a measure of experience that you otherwise not would have never had got without having gone through it. It's easy to get frustrated and say, you know what, I'm not looking at this charts anymore. I'm done. Or go in there and overtrade and not knowing what you're doing and then walk away with a toxic view about the experience. Whereas yesterday, all of us that were together, we were walking through the entire daily range on a 1 minute chart. So that way we are reading the intraday volatility, how the market would likely reach for a liquidity pool. If it doesn't reach down for it, what's it going to do? Change gears. If it pulls back into a imbalance after it's left it, I taught you how to save your stop. Don't wait for a full stop out. Like there was a lot of things yesterday that if I were 20 years old again, I would have really had a notebook out and pen and literally going through that whole thing again and with the chart. Like I would still be doing it today, going back through yesterday's
Nice,
price action,
crazy.
reading everything
It's
into what I was outlining on the
actually a
tweets,
chat.
because that would have preserved so many accounts that I literally with live money blew out in the early 20s and in early 1990s.
I
So
actually got a picture of
when I
ICT.
give you these
Here you
lectures
go.
and I talk about, you know, the things that are going to be problematic, they're not the
Giga chat.
conversations that the young guys want. Like you don't want
Strong
that. You want to
jawline.
be in these big moves that capture a lot of movement, make money, and then parade on social media. That's not what I'm trying to
Got
inspire.
himself today.
I'm
Yes.
trying to inspire folks that have a sober mindset
Yeah, for the people who don't
about the
have
real
Twitter,
risks
I just
involved in this
decided
industry,
to
because it's
let it
easy
go on
to
here.
hurt yourself. It's easy to hurt yourself listening
Yo,
to
Harry,
anybody,
how you
even
doing?
myself. So I have to pick my words carefully, because there's a few out there that just want to take anything they can take out of context and say, look, he didn't do this right. He said that, he didn't. But forgetting the fact that we talked about 3 o'clock yesterday being a short after the buy stops get taken out and go back to the middle of the range. They're not going to talk about that. But that was the whole point of yesterday's discussion.
No, I know it's not him,
So
but never mind.
as I mentor, as I teach, as I try to bring things to light with,
Let me check out your
you
chart.
know, the things that I use and implement in the marketplace,
Nola.
there's this large chasm, okay, between hearing me or watching me display
Yes, I like
an
it.
idea conceptually versus really understanding
Deshina.
what it is that is required to do it yourself. Because the analogy I use all the time, it's not like you watch the video and it's an instant download. It may feel like that. It
This
may
is what
look like
Deshina
it's
thinks about
easy.
USD CAD,
It's not
and
easy.
it makes
It's
sense.
not easy. When you're developing and
Accumulation,
you're learning,
manipulation, now we're
it's
moving
normal
down for
for you to have
distribution.
that
It's actually
overwhelming
good.
sense of uncertainty. That's a normal thing. And I had that. I had that for a long time.
Long
Nobody
accumulation,
was really
guys.
cheering me
Oh
on.
man,
I'm
there's
telling
nothing
you
happening.
that that's a normal part of this process. And try not to get your attention on like the Instagram guys, the folks that want to promote the image only, that type of thing. I want all of you, at least in my target audience, is I want everyone to appreciate the underlying risks, because it's real easy to wreck yourself financially, emotionally, psychologically, and it's painful. And you can develop real mental illness
Yeah, it's a bad.
from
It's
allowing
a slow
yourself to
day,
be
Harry,
harmed in
today.
these marketplaces. Because it's easy to just feel like, okay, well, I got time. I'm going to sit down in front of the charts. And if you applied that type of mindset yesterday, that was the whole point of walking you through it yesterday. I knew if I wouldn't have been talking or tweeting about yesterday, most of you would have been like, I'm done. They're just not doing anything. I'm bored. And some people were actually tweeting, say, oh, there's no setup. I'm just going to leave. If you are not versed in understanding what you're doing in the market, number one, two, with what I'm teaching you, and you say, I'm not going to look at the market because the setup's not there, you're cheating yourself from real experience that's going to protect you in the future. I'm not always going to be here to point to where the market's going to go. I'm not going to be chit-chatting with my mentorship group, you know, in the future when I can't do it, they're going to be left to make these decisions and lean on their own experience. So when I teach, I'm teaching an independent thinker's approach where you're not handheld with me. I'm not trying to glad hand with anybody. I'm not holding anybody hostage. My intent is for you to be able to look at the things I'm teaching you.
It's a ranging day, guys.
Go through the experiences and endure the things that are required for you to get a better understanding of what it is that's required to participate in these markets. But the importance is you have to go through these long periods of boring price action and looking at things that aren't necessarily going to put anything in your pocket immediately or take anything out. That's the main plus. That's an advantage. So when you're just observing and you're tape reading, not even demo trading, like there's a lot of you that are pushing the button already with live accounts saying, yeah, I made this ICT, I did
Good
this
guys
with
in
your
the chat.
mentorship. That's cool. You know, I get it. You're excited, but I've already mentioned many times, none of you should be doing that yet. Like we have not had enough time from me first starting teaching this whole thing. I think what was the first lesson in February or something to that effect? It was really early in the year. All of you should still be in the observation and maybe just starting to work into forward testing. But forward testing is not pressing a demo. Like you got to be sitting down in front of the market and tape read.
Yes, sir. Tape reading.
Make annotations on your chart without pushing a button. Stop thinking about how much money you're making or losing and stop thinking about all the opportunities that you're missing. These things repeat. That's one of the better takeaways from sitting down in front of the charts and reading price on a day-by-day basis, because then you'll be convinced rather quickly that there's an ample amount of opportunities over the month. Stop thinking that you have to trade every single day. But if you beat yourself up and not know what you're doing and you overtrade and or push, like I would like to see that 38.55 level swept. It would make sense to do that. But the market can stay in a range bound condition or trade higher and leave that there. It could be there for months. Nothing says it has to go down there right away.
Yeah, same situation up here.
And right now, if you're looking at your, let's see, on your E-mini S&P, let's go into a 5-minute chart. All right, so right now it's 10 minutes to 9 New York local time. We have swept the 39.34 level, and we took out the short-term highs at 39.44. So both near-term buy-side liquidity and sell-side has been taken out. After three, again, we're looking at a 5-minute chart on E-mini S&P. So on TradingView, your symbol would be ESM2022 and 5 minutes interval. So if you look at the high that was formed around 5 o'clock in the morning or so, let me see if that's the right time. Yeah, 5:10, 5:15. That high at 39.49 and a half. That was 3 times the market went up. See that? It was a high formed at 3:45 a.m., then a higher high formed at 4:40 or so, and then 5:15. Then the market broke a short-term low at 5 o'clock in the morning. Fair value gap formed on the 5:40 candle, and then the market traded down. And notice it did not take out the short-term low at 4:10, but then ran up above the short-term high at 6:20 a.m. Then broke down. We created another fair value gap on the 8:10 candle. No real displacement on the downside, except for that small little low at 8 o'clock on the dot. And then we broke down and took out the short-term low at 7:10. Now, I'm not saying that you can't scalp that. That's obviously a scalp. But when I'm looking at the market, I'm not looking for these little tiny micro moves, okay? I'm looking for a move that could be framed as a small scalp like that. But I want to be part of a larger price run. I mentioned earlier in the conversation that
Oh,
I'm
it doesn't want to
teaching
go.
my students to look for low resistance liquidity runs. That's either going
Equal
long
lows.
and running above an old high, or going short with the target of running out an old low. That is kind of like my bread and butter approach to trading. There are things that obviously help me frame that logic and that idea, but they are predominantly already taught on my YouTube channel. So you can dig into all those other things that support the idea. But the main thing, if you're a student that just came to me by way of someone saying, hey, look, check this guy out, whatever, note that low at at 410, at the liquidity resting rate below there. There isn't really any imbalance to the left of us. So the liquidity resting below 410 on E-mini S&P 5-minute chart, that's a draw on liquidity. And then there's no real imbalance after that until we get down to the lows at 250. Notice the low at 250 in the morning. Go back a little bit and you'll see that's relative equal lows down there. So there's sell side resting below that. So that's a draw. Let me put that on the chart now. All right, so I forgot what I was saying.
Yeah, it's
Low
drowning with
resistance
all the
liquidity
ball
run.
lickers. True.
The idea of looking for trades that
True.
are one-sided, where it's easy. You don't have to put a whole lot of thought into it, but waiting for those types of setups. Those are, in my opinion, what traders should be striving to trade and hunt, not looking for just any old pattern. You know, you're all learning my fair value gap. Not every little gap constitutes a low resistance liquidity run entry. Many times it could be just filling it in. It's because it's a common gap. Fair value gaps are part of a underlying logic, and it's not just a small little separation that's highlighted with 3 candles. Okay, that candle at, if you have your 5-minute chart up on E-mini S&P, if you look at the candle exactly at 8:10 this morning on May 20th, 2022, that is the fair value gap. That one candle that is down, the next candle to the right of it has a high of 39.40 and a half. The candle prior to the candle at 8:10 has a low of 39.41 and a half. That gap, because it has already ran buy stops, the buy stops resting above that 620 high, that right there, that is a fair value gap, because it's implying, and the logic behind this and narrative is, the market has already dropped, but then we return back into that imbalance at 8:10, that candle. So it fills in that candle, rebalances, goes back up to the low of the candle at 8:05. Then price is allowed to release lower and take out the low at 7:10, because there's liquidity resting below that. And then now we just swept the low, or did we? Did we get that yet? Yep, we swept the low at 4:10. So when I'm teaching people to look at the marketplace, it's easy for someone to be critical and say, okay, look at this, you know, this fair value gap didn't work there. Oh, this didn't work there. This didn't work there. If you're going to look at what I'm teaching or investigate what it is I'm looking for, don't go in with the mindset saying, let's see how this fails. I want you to go in looking at how I teach you how to find it, because the critics, they avoid all that. They're not going to go through the process of doing it the right way as I outline it. And then you'll see that they exist. They're there in the move every single day, every single week. They repeat all the time. But if you go in looking for moves that's just simply because you think it's a fair value gap, that's going to frustrate you, because it's not going to give you moves like yesterday. There may be fair value gaps there, okay, by what is defined as the pattern, but that pattern is not associated with the expected delivery of price for that given day. So what do I mean by that? As I outlined, we had a big down day on Thursday. It was a large range day, and we're near the end of the range on that daily run that was lower from April high to May 12th. So we're, by definition, without the use of an indicator, we're oversold. We don't need an indicator to plot the fact that we're oversold. So the market's really, really, really suppressed, pulled down low. It's at a real deep discount. And we're at the end of the week, and we stopped short on S&P and the NASDAQ before running out May 12th's low. But the Dow was able to go through May 12th's low. So all of those ingredients come together and create this product called consolidation. And those days, if you don't know what you're looking for, when to anticipate them, how to read them, you can go in and trick yourself into thinking there's a pattern there. There's a pattern in anything. You can be fooled by randomness. But when you apply logic and the narrative that would be associated with a low resistance liquidity run, that means it's a high probability one-sided price move that is justifiable only on the side that you're trying to trade. In the beginning, when you're learning, it's not going to feel clear to you as to what that means. And that's why I tell everyone, you have to take your time. You're going to get these moments of astonishment where it's like, I finally got that. It's an epiphany where you discover what you didn't realize was important to you.
Yeah, those are the
Now
best
suddenly
moments.
things become a lot more clear. And that is the byproduct of going through back testing, looking through old data and studying it. Watch that gap at, let's see, what candle is that? 840 on your 5-minute chart. See if there's any response after going into the high on the 845 candles, high at 39.37 and a quarter. See if there's a response in there. We left relative equal lows at 39.29 and a quarter. And we have sell side resting just below 39.15 and a quarter. So one of the frustrating things I've endured as a mentor and teacher, not just in recent years, but when I was doing one-on-one consultations and teaching one-on-one back in the late 90s, that does not happen. So please don't try to reach out to me. I don't do them anymore, but I'm just referring back to those experiences. I had many times where the people I was working with, they would take what I gave them, follow the instructions, and they were on their way, happy. And I had a handful of folks that were, if I give them a set of rules and say, this is what you're looking for, this is what you're trying to operate and engage with, they would say, okay, I get what you're saying, but. So as soon as you say but, you just cancel out everything before what you just said. What they were saying to me and showcasing is they have no discipline. And many of you learning this, not just under me, many of you are going to discover that you don't have discipline either. I didn't have it either in the beginning. I was literally all over the place, chasing everything because I felt like there was going to be something else that made it easier. When I discovered the easy aspect comes through the grueling process of going through and reading price, studying this candlesticks, it wasn't candlesticks back then, it was open, high, low, close bar. But the randomness of price action, what repeating phenomenon were taking place, and studying that. And because I was actually taking trades and losing, I was trying to go back and say, okay, somebody obviously made money on the other side of this trade. So how are they doing it? If I'm losing in my live account and I'm putting money up and I'm buying the grain markets, or I'm buying, live cattle or lean hogs, or, crude oil, gold, or whatever I was at the time trading, what was I doing wrong that they could see that was an opportunity? And that was one of the biggest epiphanies for me, is to go back and see what it was I was referring to, and how if I was to reverse it and say, okay, if I didn't look at it with that perspective in mind, okay, if I didn't look at it as Like if I'm bullish, I'm buying it. That's all I was doing back in the 90s. I was afraid to short. I didn't understand it. So I was a perma bull. Okay. So if
Permable.
I took a long and I got stopped out, or if I didn't use a stop loss, because I did that a lot in the 90s, I was afraid to put it in the wrong place. So what was the safest way to trade
Damn.
then in my mind? Don't use a stop. And I ruined myself so many times doing that. You have to have a threshold at which this is where I'm wrong. I'm not going to trade anymore. This is where I have to pull the
Always
plug.
use stop loss, guys.
But I would go back in my trades and
That's tough.
start reverse engineering it from the other side. Like someone was a bear. And that was one of the biggest discoveries for me to trust being a short or a bear, is to see when my own live trades were failing, when I was extremely bullish and I had my biggest positions on. I'm long 20 contracts of soybeans. I'm really in there. I'm really trying to do what is likely to be a big move, right? So if it craps out and I'm stopped out and it goes careening the other direction, I'm going in trying to figure out what it is that I did wrong. And if I was a bearish trader, what was I looking for that would be there? And one of the patterns that kept continuously forming is what I literally just gave you all on mentorship on YouTube. That pattern of waiting for a run higher, because I would chase breakouts. I didn't call myself a breakout artist, okay? Because breakout artists, they would literally just leave their stop order above the marketplace and let the market trip them in. Not me. Back then, I was scared. I wanted to see the market really running, really taking off, where a reasonable expectation would be to see the market go maybe 2 cents above an old high. If you're trading the grains, it's like $100 per contract. It's the same as like an e-mini. It's $50 per cent. But I would wait for it to move like 15 to 20 cents. Now, on that big candle up, I'd be chasing it and buying long there. Well, obviously, just static retracements would come back and start scaring me. And I would move my stop loss, if I had one, lower, opening up the risk even larger and larger, because in my mind, I had to be right because it's been going up. It was really explosive to the upside, but I got wrecked. I got my hinder parts handed to me. And what I discovered was this pattern of going above an old high, then breaking down, and then that secondary rally up. At that time, if I hadn't been stopped out, or if I removed my stop and I weathered that retracement, I would feel like, okay, I dodged a bullet there. And then I would feel more confident, and I'd be in there praying to God, help me get this move past, this level here, keep going up, just let me get out of it. Even at that point, I didn't want to be a profitable trader in that trade. I just wanted to be able to survive it and cover the cost of the commission, which at that time I was paying $100 per contract. Let me say it again. $100 every contract. Fox Investments. Okay. That's what I was paying as a beginning trader. Everybody was getting raped back then. It was ridiculous. Okay. You guys complain about what you have to pay for your commissions today. This is peanuts. Okay. It's nothing compared to what we were having to pay back in the 90s and before that. It was just, they called it full service brokerage. Full service. Yeah. They're servicing you, all right. The hose without no lube. And I didn't know any better. I figured this is what you're supposed to do. And it wasn't until later on I moved to Linda Waldock, where it was a little bit better in terms of the commissions. I think it was around like $30 round turn, which even by today's standards is still expensive. But man, coming from $100 per contract to $30, it's a big savings. But back to the discussion about how this whole model evolved. During that return back to the fair value gap that I had no awareness of, I had no awareness of that fair value gap at all. Didn't even stand out in the chart. I had no idea what it was. Didn't see it. It was always in the charts, but I paid no attention to it because I didn't understand it. But as it went back up into that fair value gap, I'm thinking, okay, my long trade is going to be able to get me back to a point where I can just get out of it because I can't stand it. I'm completely mentally and physically and emotionally fatigued now. I don't have any stamina to be in the market anymore. Not long, not short, nothing. I just want to be out of it. Give me a number one, tweet to me number one right now if you've ever had that experience where you're in a trade and you're just absolutely exhausted. You just want to get back to even. You don't care about being profitable. You don't want to be a net loss on a trade, but I don't even care if it goes to the moon. Just let me get out of where I got in it. That is what these markets will do to you. That is the byproduct of a day like yesterday. You have to know what that feels like. And many of you are so new, absolutely so new, that you don't even know that that's available to you in terms of insight and experience that would protect you. It keeps you from learning how painful that you can blow your account. You don't need to blow your account, folks, to learn these lessons. That's why I'm mentoring you this way. If you go through these learning episodes and take yourself in the market and endure these moments like yesterday, that one day you can look back and say, well, I didn't make any money.
See you around, Dean.
This was a waste of my time.
Thank you for coming.
This is a joke. This guy
If you're
can't
not
trade.
listening to this space right now, you're missing out, man. There's
His
so
model's
much
broken. It's
good
fake.
stuff
It's
right
flawed.
now.
It's illogical. He's only hindsight. He's this, he's that. That's what losing traders do. You immediately go to the toxic excuse as to why it's not working for you. When the whole concept and the point was, go into the marketplace, study, what is it doing? How is this going to benefit me? Or more importantly, how could I be harmed by this? Because if these environments repeat, and they do, if you know what they look like going in, or once you get involved and you can identify what it is in terms of a market profile day where it's likely to consolidate and chop you up, how do you engage with that? How do you trade it? Well, I gave you insights yesterday on how to do that. Stop trading off until all throughout the afternoon, wait to that last hour trading. And look for a pattern that makes sense. Run them at buy stops and pull back to the middle of the range. You don't need it to take out the lows at 39 or 38.55 or what it was. You don't need that. If it pulls back to the middle of the range and you sold short the daily high, who's going to complain about that? I'm sure look around, you'll find somebody. But if you're in here trying to find setups that are consistent, even on consolidation days, you're going to find that those choppy days, if you go back and look at the last hour of trading, many times you're going to find that opportunity present itself. And sometimes it can go even further in the middle of the range. But it's better to take the bulk of your trade off, as you watched me illustrate in my video last night. It's better to take the bulk of your trade off in the middle, because it could stay range bound, or like it did with me, come back up and take my stop, which was only on one contract basis. And the majority of everything else was taken off in the middle of the range. And you watched me take the other one off. The remaining two, I took one off in the video of the recording. But back to the discussion of the model. So during my times when I was being a breakout trader chasing price, so I'm like Johnny come lately. Okay, I'm waiting for it to not only break out bullishly and run up 15, 20 pennies. Okay, that's $1,500. Oh, no, I'm sorry. It's 20 cents. That's $1,000. So $750 to $1,000 movement already higher. And then I'm going in and I'm buying it. That's what I was doing back then. Because in my mind, as a new trader, no experience whatsoever, completely greenhorn. I mean, I was the definition of absolutely clueless, but I'm in there with live money. Way too fast, no idea what I was doing. And I was chasing it because I was thinking, okay, Ken Roberts showed me in this book that these moves go like $20 moves, in the grains. You can do that. Or silver is going to go up to $50, an ounce. It's every day, every year he was promoting that. Buy silver, buy silver, buy silver. And that book really converted me into thinking that every trade I was going to get into was going to be these big blowout, huge run up moves. So it was in my mind thinking, hey, I'm going to wait for it to break out. That initial breakout encourages me, but then I'm going to wait. I want to have further confirmation. And a lot of you actually probably have this experience too, where you can pretty much see where it's likely to go, but you don't have the courage to actually go in when it's the best time to get in. You want to wait for it to start moving in that direction and give up a half or 3/4 of the move. And then you start saying, okay, well, I can see it's going to go to that particular level right there. And then you go into the trade. And it might go for you that little piece. And those are your wins. They're the ones that you'll feel confident in showing your friends on social media or your coworkers. But you won't share the ones where it retraces against you, which is normal, but you get either stopped out or scared and you close the trade, and then it runs to your objective. And you go away thinking, oh, I'm never going to learn this. You're never going to learn it doing it that way. And just like I didn't learn how to trade profitably by doing what I was explaining earlier, waiting for the breakout, anticipating the breakout, seeing it, and then watching it run even further, and then calling that confirmation. No, that's not confirmation. That is observation of someone else doing it right and me not having the understanding, the discipline, or the foresight as to engage it when I should have. But when it would go back up into that fair value gap on my long after it took out a high, I would be confident that I'm going to get to the point where I can get out of the trade and be break even. So what I was doing was teaching myself to be what? Late to the party and never making money. Think about that. Apply that same hardcore in the mirror analysis of yourself, because I guarantee you, put a number 2, tweet to me number 2, if you've ever endured that or experienced it. And there's no shame in it. It's normal, because these markets are well, in a lot of ways, it's a mirror. It's going to show you yourself. And that reflection isn't going to be appreciated by most of you, because you think you look a certain way or are a certain type of person. And when you engage in these marketplaces and you put in your opinion or you associate your intellect to what these little patterns and candlesticks are likely to do next, and young men and women, they stake their whole existence and image on the fact that these candlesticks do something that relates to a profitable or positive outcome. Instead of just saying, okay, is this making me money? And how is it going to hurt me? And over time, when I was going back through all of my losing trades as a bull, because in the 90s, that's all I was doing, I discovered, because that pattern that Ken Roberts was teaching in his course, which was not really accurately described or titled, but the world's most powerful money manual and course. And it was neither powerful, okay, or enabling for me for any profitability. I've never made money with anything the guy taught. But when I took everything that he talked about and John Murphy refers to in his book, Technical Analysis of the Financial Markets, I think that is a book that everybody should have, not because the stuff in it works, but because if you take that
You
logic
guys are
and
not
turn it
sleeping,
upside
right?
down, you
Keep
have a
listening, right?
90% winning
It's
rate,
ASMR.
okay, and back testing. Go back and look at all that kind of
Don't
stuff.
fall
And
asleep.
that logic fails. It fails. Trend lines are wonderful when it's already happened. Everybody can do that kind of thing. But the hard walk forward for traders, not only under my mentorship, but in any endeavor in terms of trading, this is hard. Not because the concepts are unavailable, because they have been obviously explained to you. What makes it hard is your personal personality, your character flaws. All of us have character flaws. I'm a perfectionist. I have to be perfect. Like, I have to be perfect. In my mind, that's what I'm pursuing. I'm never going to get there. But my trades, the things I'm showing, I think they illustrate above average. I'm
Every
getting
time I
into
sleep.
lows and getting out above old highs, vice versa.
No,
Now,
no.
I'm not doing it all the time. I take losing trades,
Equity
but my logic
opens
is I want to
soon
go
too.
in and I
I
try to
think
teach my
we'll
students,
drop
where is
instantly
the
and then
most
retrace.
logical entry point for a trade? And before I even do that, I want to know, where's it likely to go, and if that is likely to be the outcome or the terminus to where price is going to be drawn to. can I justify a trade in the opposing direction? Because if I can do that, then I still might take the trade, but I'm not going to trade with 4.5% leverage behind it, which would be like my competitive leverage gearing. I don't always trade with that.
Yeah, the
But I
market is
do it
asleep.
to showcase the difference between talkers out there that talk about what they do in market replay and day-in reports that they can easily be, changed and audited and make adjustments and edit it. You can't do that with TradingView. There's nothing, you can't do any of that with TradingView. And you sure as hell aren't going to be able to do that when you're trading through a live broker and using TradingView as the portal. So that's why I'm teaching the way I teach. That's why I'm in this TradingView. That's why I show you the statements. That's why I show you the results. The bottom line is you can go out there and chase all kinds of wonderful illusions that a lot of people want to trick you into believing.
Nice.
And yes, I made
like.
millions of dollars selling my education. I don't do that right now. I'm not going to do it again. This is not a lead in. I'm not teaching you a little bit to get your mouth wet and then say, okay, now here's the pitch. I'm not selling anything. Nothing.
Dave, I like
It's
that
been
comment.
stressful.
That's actually good.
But I do enjoy teaching. But I want to teach you properly because there's a way to do this incorrectly. And it's everybody out there parroting what I say. They have no idea why I said what I said. They just repeat what I said. And that's why their students get frustrated because they can't get answers to the things that they heard me say, they then repeat because they don't understand why I said what I said. So when I do these long rants and discussions that are very boring to someone that just wants to get in, give me a stop and give me a target, I ain't got time for this. I got things to go on internet and talk about. Those individuals are never going to find longevity or consistency. And my students, my heart is in them succeeding. And I think if you pay attention to me long enough, you can hear that. Like, I am passionate about all of you. Like, I want you to succeed. What's it going to give me? There isn't going to be a mentorship for sale. It's just the enjoyment, the satisfaction of knowing that I poured myself into individuals on the internet that I'm never likely to meet. And you have done something to change your entire family tree. And that to me is amazing. I wish I would have found somebody like what I'm trying to be for all of you. But I'm not going to sugarcoat this stuff for you. I'm not going to sugarcoat it and say you're going to walk into these marketplaces and it's going to be an optimal trade entry every single time you get in it. And you don't need to worry about a stop loss. You don't need to worry about over leveraging. Just do as much as you can afford. Do you understand how irresponsible that would be? I'm telling you, I'm promising you
That's
that you're going to
cuckoo,
lose
man.
money. These young guys out there that sell courses and make YouTube videos, you never hear them talk about risk. None of them really put risk disclaimers in front of their videos, but they're out there showing their leased Lamborghinis and such. Let me tell you something. When you make, for instance, like $500,000 a week in mentorship pay, okay, how many Lamborghinis could I have purchased or even leased doing that for 6 years or so? How many houses could I have rented and pretended to be somebody I'm not? How many vacations could I went on, took pictures and had somebody go
No
around
problem,
taking pictures
David.
of me and filming me? Look at me, I'm flossing. If that was what I wanted to do, I certainly could have done so. And you didn't see it, and you still don't see it. Because none of that is going to deposit money into your pocket. A lot of you are trying to live vicariously through other guys and gals out there on the internet doing those types of things. When I was a younger man, that was my approach. Today, I teach with a really boring, introverted style because this is what pays the bills. This is what's realistic about managing risk. Talking about making money and not really emphasizing the underlying risk associated to doing this is irresponsible. And I want you to understand where you're going to lose. I'm telling you, you're going to lose. But I want you to know that it's assuring to know where these pitfalls are likely to materialize. Some people are not going to want to find value in that, like yesterday's entire drawn out discussion throughout the day. That is a day that will absolutely grind you down. Anybody that's talking smack, I guarantee you, ask them to show their trade statements from yesterday, live trade statements. Anybody wants to talk smack, go show it. Put it up on YouTube, put it on Twitter. I guarantee you they won't do that because they probably got chopped up yesterday.
Yeah, yesterday was terrible, man.
I'm sitting here with my
Terrible.
son, trying the best I can possibly be to be an insightful educator and dad to him, and also communicate the same things to you, typing it out throughout the entire day. And he's able to push the button, and he's doing well. He's not been learning how to trade very long. We're talking literally less than a month. So he is by
Yeah, he
no
does
means
complicate it
a
a lot. So
trading giant.
that's true.
He's not that great yet.
It can be explained easier,
There's a lot
I
of
think.
things he's uncertain about. He's not confident about himself at this point, but his intentions, he says,
He's talking about Vinny.
that once he understands what he's doing, he wants to put a YouTube channel together. And should he get to this point, I will absolutely invite all of you over there. He doesn't care about trolls. He's not trying to teach anybody. He just wants to have
Hey, Irie, how you
the
doing?
opportunity to say, this is what I apply with my dad's life's work. And this is what I took myself out of my job with. Because I make my kids work menial jobs. And many of you probably work menial jobs. I did a lot of them. If you look at my younger life, I had such low income jobs that just stripped time from me. And I hated it. And I hated every person that employed me. Not because they were bad people. I did have bad employers, but I hated them because they had control over me, my time. When can I do something? When can't I do something? And what am I getting paid for being here? You're prostituting my time for next to nothing. And I have nothing to show for it. So that lesson was important for me. And I forced that on my children. You see these trolls out there. One guy that says he invested $25,000 into private investigators. Ask him what about the chargeback he did for his private investigator because he couldn't afford the $10,000 for the 10 days that they were recording me. And then he asked them to go on my personal property, record through my windows, my family and wife and children through my windows. And then they fired him. And then he did a chargeback on his credit card saying, oh, yeah, I
ICT
didn't make these
outlined this
charges
gap, but
for
it's not really
$10,000.
holding right
Yeah,
now.
we know
So
about that.
he said, watch if it reacts,
These
but it
people,
doesn't. So
okay,
even though we have equal
they're
lows,
sick. They're not teaching you anything that makes money. They don't make money for real.
it is not
They're working
holding
in
at the
market
moment.
replay. Because if they could,
Unless
they'd be
this is a
taking their
liquidity
AMP
run
account
and the candle will
right
close
over to that
inside or
trading view,
below,
plugging
then
it in,
it's still
and then
valid.
you'd see the results like I just showed my sons yesterday. Hello. Shit just got real. My daughter does not work at no fucking Chipotle. She manages a grocery store. My children are being groomed to appreciate the money they make on their own steam. I can give them millions.
Irie, he's live on Twitter right now, so we're
But what
listening
have
to
I
him.
done? If I die, they can't make more of it. So I'm giving them a life skill and I'm work hardening them. I had a rough childhood. I appreciate the things I've been given and blessed with. And this insight was not easy coming to me. I went through a lot of hardship. My children will appreciate what they can do on their own because if I give it to them, it's just like any old Christmas present you gave to your children. Oh, it's great for that moment when they tear it open. And 20 minutes later, they've done forgot about it. The appreciation is evaporated. A life skill like this, well, guess what? It continuously gives over and over and over again. And that would make me proud to see. I hope I get to see all of my children. I'm hoping that when Caleb makes this turning point where he can be consistent, not have any inspiration by me whatsoever, to do this on his own. 2 more minutes and the equities open up.
Look at that 5-minute candle,
That I
which
can
I
see
just
him
talked
shine.
about. It's valid if it's close
I want
inside
to
or
see that.
below still. So this was a
Like, it's
liquidity
emotional for
run,
me
it looks like.
to see it. Finally, one of my kids are trying to do it.
Equity open in 2
Admittedly,
minutes.
they were all waiting for me just to hand them money. I guess like anybody else's parents when they're with someone that's affluent. I don't live my life affluently. You've obviously seen part of that. I live an introverted life. I try not to draw too much attention to myself. And hopefully my children follow that same process. But my children work menial jobs. Caleb right now brings home $400 a week at his job. Comes home sore, works in a warehouse making, I don't know if it's condiments or something, like not ketchup or anything like that, but some like the name escapes me. Horseradish. His company makes horseradish. They're known for making horseradish. And my other son, Cody, he lives across the street from his stepfather, and they have a trailer that he lives in by choice. He's traded crypto, but he and I, we're not the closest. But I hope that when he sees Caleb do well, it'll inspire him to do the same thing. But they're all individual people living their individual lives. And they're making whatever decisions they're making on their own. And the consequences that come from those decisions, we're about to open up here in about 15 seconds. Those decisions are going to bring with them the rewards or repercussions. And all of them have been made available. Like all the things that I know how to do are made available to them. But you're discovering that it's not easy, is it? It takes some work. And they're young. They're in their 20s. They're not thinking I want to pour all that time into that. Dad's just going to be worn down and he'll just give me the money. That's really what they're thinking, like 20-year-olds do. Just take a second. I'm watching this opening price movement here. One more run on the 39, 29.50 level. Not too exciting this morning so far. Watch the buy side at 39.50. I'm looking at still the 5-minute chart because there's nothing for me to be looking any lower. Now we went down below the 39.30 lows just briefly, and just a small little movement above the high formed at 8.35. So far we don't have anything to work on based on bias. I think that it would make sense for them to run the buy side in here because everybody wants that 38.55 level. Everybody's pointing to it. Everybody, even people that are on Twitter, they're looking for it too. So if I was making a market, I'd run it up the 39.50s. NASDAQ is real heavy in here. NASDAQ's got stops at 11,960. S&P should be picking up, moving lower now if it's going to move in concert with NASDAQ. Dow, you can see it's sloppy, and that's the reason why I don't touch it. S&P is refusing to go lower. All right, so now think about what I was talking about earlier, about how we have this expectation of hunting one-sidedness in the marketplace. Does the market show a one-sidedness this morning? No. Even in the opening, it's been not in a hurry to get anywhere in particular. It's just recently went above and below for near-term liquidity, and it hasn't really moved a lot yet. Now, admittedly, it's only been 4 minutes, not even 4 minutes since the opening. But NAS looks like it wants to take its 11,960, 11,950 liquidity. No real imbalance on S&P to speak of. The only thing in my mind is the buy side at 49.50, but the stops below 39.15 and a quarter. Did they take it down to 39.15?
So, like I said,
make them think they're going to run
would
for
run
the
down
38.55 and then ram it up
makes more
into
sense, right?
39.50.
Just like ICT says too for Nasdaq.
I would absolutely
But eventually,
do that.
buy side is a target too.
Nasdaq in striking distance on that 11,950. Yeah, S&P just not wanting to join the fun. Now, in response to what I was saying earlier about one-sidedness, when you have a one-sided market gearing where a low resistance liquidity run for like a run to an old high or an old low, which is what I'm kind of really trying to teach my students to look for, it'll have a very clear pattern and expectation at the opening price, or not the opening price, at the opening at 9:30. You'll get this flurry of price action. Like if we were bearish, the ideal scenario in my mind would have been run up, take out the 39.50 level, and then break down, then come back in for a fair value gap, and then run for 39.15 and a quarter. That's, if I was bearish, that would be the ideal scenario I would have been looking for. And we didn't get that. We did get a fair value gap form at, this is the S&P 5-minute chart, so that way you can calibrate on your end. 840, that candle is a fair value gap. It returned back up into that area, and I mentioned that, you know, watch that level, and we've now started moving lower. Nasdaq has blown out its 11,950 level. S&P is about to take that 39.15 and a quarter level, and Dow just looks like a mess. So,
Sorry,
like
I'm taking
partials.
partials.
It's only
I
30
sold
stocks that make up that composite index, and those 30 stocks just don't have as much weight that like the S&P 500 and Nasdaq 100 have. But yeah, we want to see one-sidedness when we're looking at the marketplace. And if you don't have clear one-sidedness, and then if you're expecting bearish prices, the obvious would be the market rallies above the opening price, runs to either an old high or rebounds to a fair value gap, then breaks down and goes to a low resistance liquidity run for sell side liquidity below old low. That is, to me, what all of you should be hunting for. That's your unicorn. Okay, they exist, they're in the marketplace, but they don't form every single trading session every single day. You'll have a handful of those over the course of a week. But apart from that, you can do tiny little scalps. They may not have the same level of probability behind them, but if you're getting 1 for 1 and you know what you're doing, you're not over leveraging yourself, you can grow an account with 1 to 1. You don't need 5 to 1, 50 to 1, 200 to 1 like these guys on Instagram and Telegram rooms. Yeah, I'm doing. If you ever done the math on these guys, they're all 20-year-olds, okay, but they're claiming they got 500 to 1 trades. Why aren't they billionaires? Like, seriously, why? If you can do that, why are you trading with one
I was talking,
micro
but
lot
I was muted.
with your
So,
MT4 screenshots? Like,
so
it's been 6
this
months.
stop
You
loss
should
was
be
a
at
little bit
least
too tight
above
for
the
this
standing lot
sell.
now.
It was in the fair value gap, and the
things
other
that
stop loss
people
was up here.
believe
So this one was a little bit
and
greedy.
swallow just
And I saw
because
them
they
break
see
down, so I
one
entered
screenshot of
Nasdaq too,
something
which
is
is heavier at the
ridiculous.
moment.
And all I try to do is be a voice of reason, okay? I could do a lot of those things for real that they're pretending to afford, but it does nothing to make you a better trader. Thinking about things responsibly, respecting the level of risk, and doing things that are boring. Trading is boring. You want it to be boring. Your job sucks, right? Everybody hates their job. You're there, you have to put in the time. It's boring. You'd rather be doing something else. Trading is like that too. People say, oh, I love trading. No, you don't. You don't love trading. You love trading when it's profitable. Okay, let's be
Yes,
real.
sir.
You don't like trading. You don't love trading. You love winning. Okay,
Who
but
doesn't love
everybody wants to
winning,
say, oh, I love trading.
right?
I eat, sleep, breathe trading. Yeah, I do those things and I hate it. Like, I hate it. I love back testing. I love studying price action. I love that. I hate trading. Why do I hate trading? Because every single one of these candles that form, I'm expecting it to do what I want it to do. Think about that now. I'm being 100% honest with you. I want every single one of these candles to do exactly what I want them to do. And that is an internal struggle for me because I have mentioned many times I'm obsessively compulsive. So I want things my way. I am an absolute control freak on
Stop
every
loss is break
aspect of
even,
my
right?
personal
So
life. And when I look at these candlesticks, it's an internal arm wrestling match when they don't bend to my will. So in my approach to learning how to beat these markets, I had to align myself with how they book. And I was blessed and fortunate to end up in the situations that I was in, that I was able to learn what these things do. There are times when I don't know what they're doing. And it was a hard process for me to learn when that is. Because when you're young and you're able to do very, very well, very, very easily after initial luck, it gives you this feeling of invincibility. You feel like you can't do anything wrong. You feel like you can just walk into any room and command the attention of everybody. And it messes with you. So that sense of arrogance and pride, that was an affliction for me as a young man.
oh, Nasdaq stopped me out.
That
Break
obviously is what
even,
goes on
but I'm
with
still in
students. They
S&P. So let's see if we can
learn
run
from me,
that
they get
low
good at it, and then they
at 39.15. But probably it's gonna
console
go for buy side
themselves
right now because we already took
with
liquidity.
pompous actions, okay, and they outwardly, flex. And if you're young and you're doing that kind of stuff, just know that that did not help me. It hurt me.
This
And in
one
a
is
world
break
like
even as
today,
well after taking
like,
partial. So
I
there was
would
a quick scalp.
really be popular if I was the old me in 20s on Instagram. I'd probably be one of the biggest followed persons on Instagram in the trading circles. Watch the 39.50 levels on S&P. No imbalance on SPOOs on the downside. It just ran down, didn't get into the 39.15 and a quarter level, but we're back above where we opened. Real choppy. Indecisive price action is what I'm saying.
Yeah, now it's
But
going for buy side. Right, guys, I have to head off right now. Thank you for joining, everyone. Go to Twitter if you want to follow his space further. I'll have to head off right now.
In a pompous manner.
So,
because it's
If you like, you can subscribe
you're
and
gonna
go
do
to
is
my
track
Telegram and subscribe there
long
too if you want to follow daily analysis.
the people that are just gonna
Hit
look
the
for
like
you
button
to
if
be
you enjoyed the stream
how you
and
gonna
enjoyed
outshine the last
listening
time
to
you did
ICT, right?
on Instagram.
At
How you
least
gonna outdo the
I did.
last video
I
you
enjoyed
did where you
it.
showed your house that
Got a
you're
little
renting,
scalp over
or
here,
the
so that's
last
fine,
cars
but
that you
nothing
bought.
today further. It's
But they're not
not
showing
a good day to
trades.
trade.
They're not showing
Alright,
how
guys.
to go in and help the viewer.
Enjoy your day,
And I'm
and
trying
I'll
to
speak to
do
you
that
later, guys.
even in these boring
Have a
discussions
great
that I
weekend.
have in my videos.
Also,
I'm
the
giving
Zoom
you
link
those
will be
mile
sent again
markers that you're
Sunday,
gonna
right? As
encounter.
always for
Given enough time,
weekly analysis. So
you're gonna endure these things.
have a
And
great
if you
weekend.
don't have
Thank you,
something
Vera.
to lean on in terms of correcting the direction you're in,